If you are 60 or older, already retired, receiving Social Security, enrolled in Medicare, or simply depending on your retirement savings to carry you through the next several years, there are some important developments you need to understand right now. And I want to be very clear about something before we begin. There is not one single federal rule that suddenly cuts every senior's benefits on August 15th, 2026. What makes August 15th important is that we are entering a period where several changes, reviews, deadlines, forecasts, and financial pressures are converging at the same time. Some of these issues affect people right now. Others are warnings about what could happen in the future. And some of the frightening claims circulating online are simply exaggerated. So today, I want to separate the real problems from the rumors. We're going to look at Social Security overpayments, Medicare Advantage, IRS notices, the new Social Security Trust Fund projections, the 2027 COLA, and several things you can do before they become expensive problems. If you're a senior, this is one of those videos you may want to watch all the way through, because the biggest mistake you can make right now is assuming that nothing can change until the government sends you a letter. Let's start with Social Security. Number 1, Social Security overpayments are still a serious problem. One of the biggest concerns for Social Security recipients right now is the continued problem of overpayments. An overpayment happens when Social Security determines that it paid you more than you were actually entitled to receive. That can happen for many different reasons. You might continue working while receiving benefits and have earnings that affect your benefit. Your marital or household circumstances might change. Your eligibility for a particular benefit could change. Or, sometimes, the problem can simply be an administrative error. And that's the part seniors need to understand. An overpayment notice does not automatically mean you did something wrong. The Social Security Administration's own 2026 Trustees reporting continues to show how important the agency's administrative systems are, while the agency itself has been dealing with significant workload and processing challenges. So if you receive a letter saying that Social Security believes you were overpaid, don't panic. But don't ignore it either. There are several ways to challenge or manage an overpayment. If you believe the amount is incorrect, you can request reconsideration. If you believe you were not at fault and repayment would be unfair or create financial hardship, you may be able to request a waiver. And if you simply cannot afford the proposed withholding, you can ask Social Security about a lower repayment rate. The important point is this: you have options, but you generally have to ask for them. Don't throw the letter into a drawer. Don't assume the government will automatically correct the mistake. Read the notice carefully, check the dates and amounts, gather your records, and contact Social Security promptly. And always be cautious about anyone calling you and demanding immediate payment. If you receive a suspicious call, don't give out your banking information just because the caller knows your name or some basic details about you. Use the official Social Security contact information instead. Number 2, the Medicare Advantage home visit issue. Now let's talk about Medicare Advantage. This is an area where seniors need to understand the difference between receiving medical care and having medical information documented for insurance purposes. Federal watchdogs have raised concerns about how some Medicare Advantage organizations use health risk assessments and home visits to identify and document diagnoses. Why does that matter? Because Medicare Advantage payments to private insurers are partly connected to the health conditions of the people enrolled in their plans. That means diagnoses can have financial consequences for the insurance company. This does not mean every home visit is fraudulent, and it does not mean that every diagnosis documented during a home assessment is incorrect. But it does mean that you should understand exactly what is happening when somebody arrives at your home claiming to represent your Medicare Advantage plan. Before allowing anyone to conduct an assessment, ask, "Why are you here? What exactly will you be documenting? Will information from this assessment be submitted to my insurance company or Medicare? Will I receive any treatment or follow-up care? And can I verify this appointment directly through my plan?" That's an important distinction. A legitimate Medicare-related program should not require you to blindly trust someone who appears at your door. If you weren't expecting the visit, close the door and call the number on your insurance card. Don't use a phone number handed to you by a stranger. And never sign a document you haven't read and understood. Your health information is important, your Medicare record is important, and your financial information is even more important. Take a few extra minutes. Number 3. The IRS is using more technology to find mismatches. Now let's move to taxes. This is another area where retirees need to pay attention because retirement income doesn't always come from just one source. You may have Social Security, a pension, interest from savings, dividends, rental income, a small consulting business, investment income, or occasional work after retirement. The IRS receives information from employers, banks, financial institutions, payment processors, and other reporting entities. When information reported to the IRS doesn't match what appears on your tax return, you can receive a notice. One example is a CP-2000 notice. That notice generally means the information the IRS received from third parties doesn't match the income reported on your return. And here's the mistake I don't want seniors making. Don't automatically assume the IRS is correct, but don't automatically assume the IRS is wrong either. Read the notice. Look at the income they're talking about. Compare it with your tax documents. Sometimes the issue is a genuine omission. Sometimes it's a timing problem. Sometimes income was reported under the wrong category, and sometimes the IRS simply needs additional information. The important thing is to respond. A notice sitting unopened on the kitchen counter doesn't disappear. Ignoring it can make a manageable situation much more difficult. And keep your tax records organized. If you are retired and have multiple sources of income, don't wait until tax season to start searching through old bank statements and investment documents. Create a simple folder for each tax year. Keep your 1099s. Keep your pension statements. Keep documentation for investment sales. Keep records of rental income and expenses if you have rental property. And keep documentation supporting deductions and credits you claim. The more organized you are, the easier it is to respond if something gets questioned. Now let's talk about the bigger warning, Social Security's trust fund. This is probably the most important long-term issue in today's video. The 2026 Social Security Trustees report was released in June, and the report contains a number that every current and future retiree should know. The Social Security Administration says the Old Age and Survivors Insurance, or OASI, trust fund is projected to be depleted in the fourth quarter of 2032. At that point, under the trustees' current law assumptions, continuing income would be enough to pay approximately 78% of scheduled OASI benefits. That means the often discussed 22% figure is real as a projection under current law. But here's the part social media videos frequently leave out. This is not a 22% cut happening on August 15, 2026. It is not a check being reduced next month. It is not a new law that suddenly takes money away from every senior. It is a projection based on the current structure of the program and the assumption that Congress does not change the law before the trust fund reserves are exhausted. And that distinction is extremely important. Congress has several possible tools. It could change taxes. It could change benefit formulas. It could change retirement-related rules. It could adjust taxable earnings. It could make other program changes. Or it could combine several approaches. The point is that the 2032 projection is a warning about the consequences of doing nothing. It is not a prediction that Congress will definitely allow a 22% reduction to happen. The official trustees report says the combined Social Security trust funds are projected to remain able to pay scheduled benefits until 2034, with 83% payable after depletion under the report's assumptions. But for retirement planning, you shouldn't simply ignore the problem. If you're 60 today, 65 today, or already retired, you should understand your household's dependence on Social Security. Ask yourself a simple question. If my Social Security income were significantly lower several years from now, what would I do? Would you have enough retirement savings? Would you have to return to work? Would you need to move? Would you have to reduce travel? Would you have to cut back on helping family members? These are not fun questions, but they are much better questions to ask while you still have time to prepare. Medicare has its own long-term trust fund problem. And Social Security isn't the only program facing a financing challenge. The 2026 Medicare Trustees report says the Hospital Insurance Trust Fund is projected to be depleted in the second quarter of 2033. At that point, projected income would cover approximately 89% of scheduled Part A benefits. Again, this is not an immediate 2026 benefit cut. It is a long-term projection under current law. But it matters because many retirees think of Social Security and Medicare as completely separate from a financial planning perspective. They're not. If you're living on a fixed retirement budget, your Social Security income and healthcare expenses interact. If your benefit income changes while medical costs rise, the impact on your household budget can be much larger than either change by itself. That's why seniors should not only ask, "How much Social Security will I receive?" You should also ask, "What will my healthcare costs look like? What happens if my Medicare premiums increase? What happens if my supplemental coverage becomes more expensive? What happens if prescription costs rise? And perhaps most importantly, how much emergency cash do I have available?" The 2026 Trustees reports put the Social Security OASI depletion date at late 2032 and Medicare's hospital insurance depletion date at the second quarter of 2033. Those dates are warnings. They are not deadlines for panic. Number 5. Don't build your 2027 budget around a COLA that doesn't exist yet. Now let's talk about something much more immediate. The 2027 Social Security COLA. You've probably seen numbers floating around online, 3%, 4%, even higher estimates earlier in the year. But remember this. The 2027 COLA has not been officially announced yet. The final calculation depends on inflation data from the third quarter. The Social Security Administration normally announces the official COLA in October, with the increase applying to benefits beginning in January 2027. Current independent estimates are around the high 3% range. The Senior Citizens League has been projecting approximately 3.8%. Other analysts have been around the 3.6% to 3.7% range. But these are estimates, they're not guarantees. And here's why I want you to be careful. If you hear somebody say, "You're getting an extra $80 every month next year," don't build your budget around that number today. Wait for the official announcement. Then look at your actual benefit amount. Then look at your Medicare premiums and other deductions. Because your Social Security check is not determined by COLA alone. Your gross benefit may rise while the amount deposited into your bank account rises by less. That's why the number that matters most is the net amount you actually receive. Number 6. Check your Medicare Advantage benefits before the quarter ends. If you're enrolled in Medicare Advantage, there is another simple task worth doing now. Check your plan's supplemental benefits. Some Medicare Advantage plans offer allowances for over-the-counter health products, groceries, transportation, dental services, vision benefits, hearing benefits, or other extras. But these benefits vary dramatically from one plan to another, and they can change from year to year. If your plan provides a quarterly allowance, don't assume unused money automatically carries forward. Check the rules for your specific plan. Look at your plan documents. Call member services using the number printed on your insurance card. Ask, "What supplemental benefits do I have? What is my current available balance? When does it expire? Does unused money roll over? Which products qualify?" This takes a few minutes. And if you have benefits you're entitled to use, there is no reason to let them expire simply because you didn't know they existed. Number 7. SSA processing delays mean you should follow up. Another issue seniors should keep in mind is processing time. Social Security handles enormous numbers of retirement, disability, survivor, earnings record, and other cases. When you have an unresolved issue, don't assume silence means everything is progressing normally. If you submitted an important correction, appeal, benefit application, or documentation, keep your confirmation numbers. Keep copies of what you submitted. Write down when you submitted it. And if you speak to someone on the phone, record the date and, where available, the representative's identifying information. This creates a paper trail. That's especially important when you're dealing with something that affects your monthly income. You don't need to call every week, but you should know what stage your case is in. So what should you do starting August 15th? Let's make this extremely simple. You don't need to panic. You don't need to withdraw all your money from the bank. You don't need to cancel Medicare. And you don't need to believe every dramatic headline you see online. Instead, do these things. First, check your Social Security account and make sure your earnings history and benefit information look correct. Second, if you receive an overpayment notice, don't ignore it. Review it and investigate your appeal, reconsideration, waiver, or repayment options. Third, if someone contacts you about a Medicare home assessment, verify the appointment directly with your plan before allowing the visit. Fourth, keep your tax records organized and respond to IRS notices within the deadline stated on the notice. Fifth, understand your household's dependence on Social Security. If Social Security represents 70, 80, or 90% of your retirement income, your long-term risk is different from someone who has a pension, investments, and other income sources. Sixth, don't budget around an unofficial 2027 COLA estimate. Wait for the official number. Seventh, check your Medicare Advantage supplemental benefits before any expiration dates. And eighth, keep copies of every important document you send to a government agency or insurance company. So, is August 15th, 2026 really the day that every senior's benefits are being cut? No. And I want you to remember that. But is this a good time for seniors to pay closer attention to Social Security, Medicare, taxes, and their retirement income? Absolutely. The real story is more complicated than the headline. Social Security's OASI trust fund is projected to reach reserve depletion in late 2032 under the 2026 Trustees assumptions, with 78% of scheduled OASI benefits payable from continuing income at that point. Medicare's Hospital Insurance Trust Fund is projected to reach depletion in 2033, with 89% of scheduled Part A benefits payable from continuing income under the same assumptions. The 2027 COLA is still only a forecast, and government agencies continue to use automated systems and data matching that can generate notices when records don't line up. None of that means you should live in fear. It means you should be organized. Because retirement security isn't just about how much money you have, it's also about knowing what you're entitled to, recognizing problems quickly, and responding before a small administrative issue becomes a major financial problem. And that's especially important for seniors because a $200 mistake that might be annoying to a younger worker can be devastating when you're living on a fixed monthly income. So take this weekend and spend 30 minutes reviewing your situation. Check your Social Security information. Check your Medicare coverage. Check your upcoming bills. Check your tax documents. And check whether you have any government letters sitting unopened. 30 minutes of preparation can be worth far more than months of trying to fix a problem after it has already happened. If you want a simple reference guide with the forms, questions, government contacts, and retirement money topics we discussed today, check out the American Retirees Money Playbook linked in the description and pinned comment. And if you're watching on television and there's a QR code on screen, you can use that to find it. Most importantly, don't let a scary headline make you panic. Let it make you pay attention. If this video helped you understand what's actually happening, share it with a parent, grandparent, friend, or anyone else who depends on Social Security or Medicare. Because sometimes the most valuable financial advice isn't complicated. It's simply knowing what to look for before the problem reaches your mailbox. It's simply knowing what to look for before the problem reaches your mailbox. And that means paying attention to the small things that are easy to dismiss. A letter from Social Security that looks routine. A notice from your Medicare plan that you don't completely understand. A tax document that shows an amount you don't remember receiving. A change in your monthly deposit that seems too small to worry about. These are exactly the kinds of details that can become much more important if you ignore them. Take a few minutes each month to compare your Social Security deposit with the previous month. Look through your Medicare statements and insurance notices. Check your bank account for anything unusual. And keep important government letters in one place instead of throwing them into a drawer. If something doesn't make sense, ask questions. You don't have to be an expert in Social Security, Medicare, or taxes. You simply need to recognize when something looks different and take the time to verify it. And remember, never let someone pressure you into making an immediate financial decision. Government agencies generally give you information about what is being requested and how to respond. If you're uncertain, contact the agency or organization directly using an official phone number or website. A few minutes of attention today can save you hours of frustration later and potentially protect money you depend on every single month. Thanks for watching. Stay informed, protect what you've earned, and I'll see you in the next video.